everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, just keep in mind a couple things. First, understand that you should make sure that you manage risk in a way that makes sense for you with your trades. No one trade is guaranteed to bring profits, so you want to make sure you handle the risk side maybe with stop loss, or we have a unique feature called AvaProtect. But in one way or another, you should understand the amount you're risking per trade. And also what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now we'll go over some ideas in that regard in terms of risk. As we set up maybe a trade or two in the order window, you'll see that it calculates for you the exposure to your stop loss, your potential profit, etc., so that before you place your trade, you can be confident in the planned risk and potential profit. Now, to trade in our web trader, just log in the upper right-hand corner here, which allows you to trade on both MT4 and MT5 accounts from the same location, but with our advanced functionalities. And the same is true with our app. So if we log into the web trader, before we jump into some specific items, maybe on the economic calendar or using our Market Buzz feature, we could talk a little bit about the big news that came in yesterday out of the US and a little bit more that came in overnight after yesterday evening with the US and China trade negotiations that took place over in South Korea, I believe it was. So there, first, yesterday, the decision out of the US, they cut the interest rate again, 0.25%, the same as last time. But the big difference this time, after the last cut, you had Jerome Powell talking about the likelihood of more cuts and that it would be data dependent, but they saw the potential need for one or two more cuts, etc., but wouldn't commit to it, but also was open to it, saying that it was data dependent, and was alluding to the fact last time when he spoke after the first rate cut, that the jobs market was weak and that it was a bigger risk, he thought, than the inflation risk, and that's why he chose to cut the interest rate, even though lowering the interest rate could lead to more inflation. He felt like the weak job situation warranted a rate cut. Well, this time, after the rate cut, he basically said the opposite. He said the jobs situation is strong and he doesn't see any areas of weakness, which I don't know what data he's looking at, but with the government shutdown having been going for nearly a month now in the US, for example, the non-farm payroll jobs report never came out. So there's data that has not been seen since the last rate cut. To be able to base this decision without seeing that data and understanding it, I'm not sure where he's coming from with the quote that the jobs market is really strong, because it's the opposite of what he said last time. And so the market, with him saying that, and one of the lines was something in the realm of that he doesn't necessarily anticipate another rate cut this year. It's certainly not a certain thing, he said, and then he said far from it. Like, not only is it not guaranteed that there'll be another rate cut this year, but he said something along the lines of far from it. So like really adamant about saying there very well might not be another rate cut. And so that tone, paired with saying the jobs situation seems very strong, it really caught maybe some people off guard, which thought they might hear the opposite. And down went the equities in the US and really across the globe. The USD strengthened rapidly, gold spiked down, etc. So here we sit today, and overnight there was a summit that was held between the US and China to talk about the trade situation, tariffs, rare earth metals, etc. And it seems they struck a pretty good tone and some agreements, not necessarily in writing, as of yet, but some agreements were struck that there's an understanding about the rare earth metals, and China's saying they'll cooperate more with the global need for those, and specifically the US need. And then also some talks about opening the markets up for NVIDIA's chips and allowing China to have access to them. So kind of a tit for tat back and forth, and just cooling the tensions so that both sides can get a little bit of what they want. And Trump said that the 100% increase in tariff percentage on China that he had threatened, that's no longer on the table. So cooler heads have prevailed in the US-China trade situation after their little summit yesterday. And so kind of a negative thing for the markets with the lack of projection of more rate cuts, and kind of the negative tone struck about any further rate cuts from the FOMC committee and Jerome Powell last night, but then a bit of good news about US and China striking a deal pretty much to move forward without the high tariffs, etc. So that's kind of where we find ourselves in the bigger picture. And so we might look, before we look at individual economic announcements and that sort of thing that are coming in today, we might look at some instruments that could react to the news as we see it thus far. So if the economy is viewed strong in the US, so much so that they're not sure there's another rate cut needed, and they did in fact cut the rate this time, and at the same time there's agreement between US and China, 100% tariffs off the table. That's kind of healthy economic news, both for the US and China, and really for the globe. And then we're looking at the fact that there's crude oil sitting there above a nice support level. If we look at crude, let's pull up the chart. It could be primed maybe to react to the latest fundamental news. And so this is the crude oil chart here, and these are one-day candles. So we were looking at this yesterday in the technical analysis session that I did, and it seems the fundamentals are lining up maybe for this support level to hold as well, beyond the technicals. But you can see this support level acted as resistance for some time. Here's our breakthrough candle, a large. That's typically what you see when you break through an important price level. These smaller candles just couldn't break through and hold. But when there's enough momentum, you see larger candles break through and then hold. Okay, many times that's what we see when we have a true breakthrough that's holding. We see a larger candle with larger momentum. Typically that's because of some sort of positive fundamental news, and then it holds above that price because of that fundamental news. Now, this rush up could have been, and I believe it times out with the fundamental news that we looked at last week and earlier this week, where the U.S. sanctioned Russia on their oil, on their natural gas, etc., on energy. And so that drove crude oil up and held. So now we have a nice support level that now is held once and bounced twice, 3 times, and today a 4th time, holding just above this price level here, 59.7. And so fundamentally, technically that's a nice support level. Fundamentally, then we have to ask ourselves, do we think there's reason for this support level to break? Any reason why crude oil price should drop more? Well, if you're sanctioning Russia, we may see further sanctions going on Iran, and more of an effort to get their crude oil off of the global black market, however they're getting their oil out, which has already got some sanctions on it. But that could be a situation that could drive crude oil up as well. So there seem to be some driving things there that in terms of crude oil supply. And then at the same time, you've got positive economic news with the US and China cooling off the trade war tensions, which really can do nothing but help both of their economies if tariffs of 100%, for example, are not on the table anymore. So there might be some reasons for increased energy demand, or at least the perception of it moving forward, that could bring at least speculative buying on the energy sector in terms of crude oil in this case to bounce off this support level. So with that being the situation, if you trust fundamentally and technically the support level, then it could make sense to look at a buy situation in this situation. So if you're of that thinking, we can go ahead and set up a move on this. And if I'm looking at the nearest resistance level, it's really right about here. This was an old support back here on the one-day candles, support over here, that then broke and it snaked around that price before giving in to the resistance, which was the old support, and dropping. And then once we came back up this way, it tried to break through this price level, had trouble, and down it went again. And so sitting down here at 60, it looks like the first resistance area is somewhere around 61.70, which was this old support here. Now, if it breaks through there, then you're looking at a higher price up here. This would be the next resistance, which it reached just a week or so ago, in the past week or so, which is 62.69. So somewhere between 61.69 and 62.69 is the zone of resistance that I see here. So maybe 62 being somewhere near the middle of that would be a spot where you could look to maybe take profit. So take profit, 61.5 to 62, somewhere in that range, based on the resistance levels here. And then stop loss, if you're buying on this, if again, you think the fundamentals are there to, even though the USD is strengthening a bit and puts a little downward pressure on pretty much everything it's paired against, including we saw the euro and the pound and gold, etc., dropping down a bit. We do see that so far this support level is held with crude oil. And so if we get down below that, say down to 59.5 or 59 flat, it wouldn't be much distance to risk. And if this bounces, then we've got almost a 4-to-1 payout with this setup. So I could start to cheat this down to make the stop loss a little safer to 59 flat. And now it's 2-to-1 ratio approximately. And so at 59 flat, I'm risking 8,000 to make almost 16,000 with the trade size that's there by default. So I need to lower this if I don't want to risk that much. So if I go to half a lot, I'm risking about 500, which is less than 1% of my account, to make almost 2%. So I could up that a little bit, 0.52, 0.55, until I get to where I feel like I'm risking the amount that I'm comfortable with. That's just under 1% of my balance. There's nothing magical about 1%. You could risk 0.5%, 2%, whatever you're comfortable with. But the point is, you should have your risk management plan with each trade so that you know how much you're risking and what your potential profit is before you get started. And it's basically 2-to-1 ratio here, trying to make about 2%, risking about 1% on this trade. And I can put a line here for my stop loss, which is 59 flat. Right there. So it would have to break this support and come down quite a bit further to hit the stop loss. If it just tests it and comes back up, we're safe. And we're looking hopefully for the fundamental news, the deal between US and China, and maybe the US solves this government shutdown thing in the coming days to maybe help crude oil bounce back up. In the meantime, the China news maybe can help it hold. We'll see, but it seems to make sense, and that's an opportunistic support level there. You can play with your stop loss if you want a better ratio or if you want a larger potential profit. So if I say, you know what, if it breaks the support, I'm okay getting out at 59.5 or 59.25. Let's say 59.25. So now all of a sudden I'm risking less to that stop loss. I can take a larger trade. So I could go 0.6 maybe. And I'm trying to make 1,200, and I'm still only risking 438, so I can go 0.8. And if it's going to bounce and not break the support, then I maybe don't need my stop loss so far away. if that's my plan. So now I'm risking about 1%, slightly over with that. So we'll go 0.78. And so now I'm at about 1% risk and making over 1,500 with this move. It's more like 3-to-1 ratio now, potential profit to risk. And so those are the little nuances with your risk management. It depends how far away you want your stop loss. This is a nice support level, and I do feel that if it breaks this support, it's been there long enough that it may just rush down quite a bit if it breaks the support. So maybe I don't need such a distance on my stop loss, because if it breaks, maybe it shoots down with a large candle. And if it doesn't break, then I'm making a better profit by having my stop loss at 59.25 instead of 59 flat. So that's up to you, the distance to stop loss, but you adjust the trade size accordingly to be the amount of risk that you're comfortable with, and then you're ready to make your move. So I felt a little more comfortable getting the stop loss a little closer, going after a little larger trade size then with the same amount of risk, understanding that if it breaks the support, it might just come down further regardless of whether I have my stop loss at 59 or 59.25. So the hope is that it doesn't break the support and it bounces. And if it breaks, then it's a pretty quick stop and really not a big deal with that measured risk and much larger potential profit. Now, any questions, comments on the crude oil idea or concept? I'll pause for a moment. Okay, and if I see any questions pop up, I'll address them. We can take a look at gold. Even before the rate decision and press conference yesterday out of the US, gold had been in a large pullback from the all-time high. And so we can see that on the one-day candles here. We did a measured risk buy yesterday before the rate decision, thinking that gold may take a large bounce, but covering ourselves with AvaProtect because we knew it could go flying the other way with the big news. And I took a little less than 1% hit on the cost of AvaProtect, and then I took the payout on AvaProtect already. I had 2 days protection, but I wanted to clear my trades for the trade setup today. So as we look at gold now, you have to think, gold tends to rise when there's fears of inflation. Right now, the anticipation is, wow, the US might not cut interest rates anytime soon. Moving forward, maybe not before the end of the year, based on what Jerome Powell had to say yesterday. So there's not a lot of impetus for the USD to weaken right now or for fears of inflation. And so that large driver of inflationary rush to gold as a safe haven against potential weakening of the USD, that fear is kind of gone, that the US will do a large rate cut and the US dollar might weaken from it. And so that inflationary fear on the US dollar is not driving people into gold right now. So that's why we don't see a big bounce from yesterday's drop or from the last week and a half, really, of gold dropping. So now we start to zoom in on the smaller picture then, and we see here's a big drop in the past couple of days, a gap down, a drop further, a bounce, drop further again, and this was with the rate decision yesterday. This was the drop here. Okay, 1, 2, 3 hours straight of dropping, and then some bouncing, a pullback, but the pullback not holding. So what we're looking at on gold right now, I see a resistance level forming here. Okay, this was an old support back here. See the price hit here and came up. It hit here again and came up. And then once we got below this price line, the support became resistance, resistance, and down went gold further. So now it's trying to get above this price, but having trouble and dropping back down. Tried to get above again and drop back down, and tried again just a couple hours ago to get above this price level, the old support here, right around 4,010, and dropped down again just a couple hours ago. So this looks like the USD strengthening, maybe as you'd expect with what Jerome Powell said yesterday from a fundamental perspective, the no longer fear maybe of inflation on the US dollar, and maybe fundamental reason now for gold to begin a further drop back down from the all-time high that it already pushed down from which was up a few $100, even higher than where we're at now on the price. But this is a downtrend on the smaller candles. It looks like sell positions make sense fundamentally. Technically, we see the reversal. And so if I'm looking for a take profit, maybe at the low that it hit in the past couple days, that's around 38.94 or so. 38.90. So take profit without having to break those lows would be 38.90. Going with the fundamental momentum with the strengthening USD, we're losing ground as I talk, as gold is spiking down. Stop loss then would be above the resistance, let's say 4,015. Okay, trying to make 20,000, risking 11, almost 2-to-1 ratio, even with all the dropping that already occurred. If I go down to say a quarter of a lot, I'm risking 1,000. If I do a tenth of a lot, I'm risking 430, getting close to my comfortable zone. There I'm risking about 1% on my balance to make almost 2%. And so then I can go into that position. Measured risk in the direction of the fundamental news, strengthening US dollar because of bullish talk from Jerome Powell yesterday about keeping rates maybe where they are, being far from any type of decision, he says, on any further rate cuts this year. The fact that he threw in that phrase spooked investors. And so the USD strengthened and stocks pushed down a bit. And we see gold dropping accordingly against the USD. So we're looking at a take profit down here near this low without having to break it. And we're looking at momentum technically with a nice technical resistance level here, which was the old support, and a nice reversal off that resistance. So we'll see what happens. We'd have to have it come up and hit 4,015 to hit our stop loss up here in this simulation. We'd have to break above this resistance that it reversed off of pretty strongly there. So I've got a few trades running. 2 of them are on crude oil because I had the earlier crude oil from yesterday that held. It's in the negative from yesterday's price, but that support level we looked at held nicely. Today's crude oil trying to bounce now, slightly in profit, but just getting moving. And gold also opposite direction, which will be interesting. We have a strengthening US dollar, but we're going with crude oil to rise, which it looks like it's trying to do, but gold to give way to a strengthening US dollar. It doesn't always work that just because the US dollar is strengthening, that something like gold will drop, that crude oil will drop. Sometimes there are other forces beyond the strength of the US dollar that could cause crude oil to strengthen against the US dollar, while something like gold can drop. It does kind of feel like a natural hedge that you should win at least one of those. It doesn't always happen, but if that was the case, then we would be profitable on those 2 moves if we just win on one, because the potential profit is 2 to 3 times the around 1% risk on the account. So one out of 2 on those would pay out, still with a nice profit, and if you hit on both of them, it's a really nice payout. Something like 3 to 5% if both of those hit their take profits, gain on the account while risking a lot less. Now, any questions, comments so far? Gold, crude oil, anything else? I'll pause for a moment. Okay, now we can take a quick look at the economic calendar. This is for more short-term trading or for confirmation of longer-term moves that you might be thinking about. In general, out of the European Union, which has been kind of the trend, the news was better than expected. Okay, out of Germany, retail sales. Let's make sure this is today's date. Here we are. We had some numbers out of Germany, and actually the retail sales are tomorrow. Unemployment rate ticked down, lower, or stayed the same, which is a tick lower than the expectation. It was thought that the unemployment rate would go up from 6.3 to 6.4. It actually held steady, so that was better news than expected. We also see Other numbers that came in: GDP growth rate, better than expected. It was expected to drop from 0.3 to 0.2. It also held steady at 0.3. So economically, these numbers show that in the European Union, in Germany specifically, the economy is not doing too bad. We do see a slip off in GDP growth quarter over quarter. Year over year held steady. Quarter over quarter, it was expected to go up 0.1. It was better than last time. It wasn't negative. So it was a large improvement from negative 0.2 to being flat. You know, flat GDP isn't great, but it's better than dropping. It didn't tick up to 0.1, but in general, that looks like a positive trend along with these other numbers. So, and if we come down a bit further, not just in Germany, but in the entire Euro area, we've got unemployment rate holding steady, GDP growth rate ticking up instead of staying flat at 0.1, went up to 0.3. That's quarter over quarter, and GDP growth rate year over year, instead of dropping to 1.1, it actually managed to hold as high as 1.3%, better than expected on the GDP growth rate year over year. So a slew of data that, while not highly impressive, still came in better than or at expectation. Most of these numbers out of the Euro area. And so if you're looking at, say, the DAX 40, could make sense to be a little bullish on the DAX 40 looking at those types of numbers. And so if we bring up the German 40, the DAX, we could start to look at potential entries. We see this dropping because of the US yesterday. Globally, markets pulled down, but there's some silver lining going on right now. That's a nice opportunistic entry point if you think in general the German economy, the Euro economy is doing well. And then you pair in, hey, the US-China tensions have cooled off. They had their little summit. The 100% tariffs on China are off the table now. It seems like some positive momentum in general. And, you know, the US holding interest rates steady maybe from now to the end of the year after this last rate cut. If there are fears of that in the US, well, that doesn't affect the interest rate, you know, in Germany or in the EU. So actually, the situation here is not so bad. And it could be an opportunistic spot after seeing a slew of data that came in today that really was better than expected out of the Euro area. So then I could start to say, maybe there'll be some investors looking to maybe move out of the US market a little bit because of the whole interest rate situation in the US with Jerome Powell. And that might create more bullishness anyways on the DAX, even beyond those announcements that came out of the Eurozone today that were pretty positive. So this support level starts to look pretty nice, which was an old resistance here. And once it broke above, became support, 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 multiple times, and it looks like it's trying to bounce today. Okay, so barring any negative news, this feels like something that could try to climb up towards these highs up here. Okay, and that's quite an opportunistic ratio in terms of risk to get your stop loss down here and potential profit towards these highs. So seems like fundamentally it makes sense. So if I'm putting my take profit up here, I'll put it up at maybe 24,450, which is before this line I drew. So 24,450. That would be right about, if I pull this down, right about here. Okay, that's the take profit we just put. That's before the top of all these wicks. So you don't have to break these highs, which might act as resistance, causing a pullback. So you get out before it would maybe pull back from this resistance. If you're looking for a short-term move, shorter term, unless you're wanting to look up past this resistance for a longer-term move. Now, stop loss. Down below this support, I'll probably want to get below this wick to try and be more safe, that if it tests it and goes back up, I'm still in on the trade. And so that's at 24,025. Maybe I go a little further, get below this wick as well. And so it would really have to be a downtrend to hit this. That's at 24,000 flat, basically. So maybe I go just under that. 23,990. Okay, so my ratio is not quite 2 to 1, 5,000 plus potential profit, 2,900 risk with this setup. And now I just need to adjust my trade size. So if I do half a lot, let's say, I'm looking at risk of 995. Maybe I do 0.3. Risk of 600, 0.27 maybe. And that gets me below 1% risk on my account, going after near 2% potential profit, over 900 potential profit. So nice support level here. We've got a stop loss clear down in this area, 24,990. I think I'm going to go 995. Okay. That's still below these wicks. That's a nice support level zone above this support level here. Would really have to establish a downtrend to hit that. So I'm just trying to improve the profit ratio here. I'm going to go 995. Okay, now I can increase my trade size a bit. 0.3. And now I've got darn near 2 to 1 ratio, risking about 1% to go after over 1,000, 1,080 or so potential profit. And I still have a nice distance to that stop loss there. So if I like the setup technically, I'm ready to go in the buy direction. Okay, so this is fundamentally driven, the directionality on this, and at the same time trying to trust this support level, because maybe you feel like the news out of Germany and the European Union in general, the Euro area, has been strong enough that you think this support zone, we can call it, because there's support here and there's support a little lower. So it's a zone of support. If we look at this wick, and then these support points here. Our stop loss is below all of that. And so it would really have to be a strong downward move to hit our stop loss. And it feels like as long as nothing negative happens, this should maybe start to bounce back up towards the take profit area up here. We'll see how that goes. But I feel like better than 50-50 on the fundamentals here, and the technical setup looks nice. Okay, so I see a question about what is AvaProtect. So let's go to an instrument that offers AvaProtect, like gold. Okay, AvaProtect is a way, if let's say I'm buying or selling, I don't care what it is. Right now it feels like selling. We did an example of selling. If I didn't want to put a stop loss, maybe I think there's a lot of volatility and my stop loss might get hit before the move eventually goes the way I think it'll go, which is why last night I set up with AvaProtect before the rate decision, because I knew there would be spiking in both directions. It went up $50 an ounce. It went down $50 an ounce. No matter where you had your stop loss, if it wasn't 100 or more dollars an ounce away, which gets pretty costly then, even with a small trade size, you were probably going to get your stop loss in. So rather than having a stop loss, especially when there's a lot of volatility, you can use AvaProtect. And you can protect by the hour. And depending on the trade size, the cost of the protection is more or less. So if I'm doing 10 ounces of gold, that's a pretty sizable position anymore for gold, because gold's been moving 50 or 100 an ounce in a matter of hours lately. So 10 ounces, you could make $1,000 pretty quick, or 1,000 euros, 1,000 pounds, etc. Now, you see the cost. If I'm protecting by the hour, maybe I know there's an announcement soon. I just want 1 hour protection. I think it might go flying one way, but if it goes the wrong way, I'm protected for an hour. I pay for that up front. I'm protected for an hour, no matter how far it goes the wrong way. Any negative floating when the protection ends gets added back to my account. And then the trade can keep running. I could add a stop loss after that. Or if I got stopped out during the protected time period, any loss is added back. You just pay the cost up front out of your balance for the protection. So you can think of it like insurance. So you can protect for multiple hours. You can protect for days. Okay, 2 days protection. That's not so much for gold. $457 or so for 10 ounces of gold. I mean, to make $457 with 10 ounces, $50 movement on gold would make that back, plus profit. In 2 days, we see how far gold moves. It moves like $200 many times in 2 days. So you could make a huge profit on 10 ounces for what amounts to be, on my account, less than 1% risk. And I could have 10 ounces of gold that could bring me 1,000 or more, 2,000, 3,000 profit, depending how far it might move, okay, in those 2 days. So that's how AvaProtect works. You can put a stop loss at the same time at a price that maybe is way down in a different direction. The way I would do that, like if I was selling and I had my stop loss up here, I'd probably have a pending order as well, that if this came up, hits my stop loss, when it closes, if it's during the protected time period, all the negative floating would be added back. And I could have a pending order also at that same price to then reopen from a fresh price. And so I gain a much better entry point, even in a loss, with only a small cost because of the protection. So there are different ways to use AvaProtect that you can simulate within your trade plan. But it's a very nice way to manage risk, especially during times of volatility. Very good question. Now, before we end things, I think we could look at the market buzz feature. Economic calendar. We didn't finish up on the economic calendar. I wanted to show you maybe an announcement that did not occur yet. We looked at the Euro announcements that already came in, Eurozone. We do have an announcement out of, let's see here, out of the Euro area still with a rate decision, okay? So for announcements that haven't happened yet, now they're expected to keep the rate the same. So you shouldn't see, if this comes in as expected, which usually it does, then we could see, well, what's the trend in the past with the Euro pairings when the rate decision comes in at expectation? So we go use this volatility tool, if you haven't used it yet, and we could take a look 4 hours after the event. Look at what the Euro has done against the USD in the hours after the rate decision. These are the last times, in December, March, April, June, July, September, okay? 86% of the time, only once we didn't get upward run with the Euro, and all the other times you had a huge climb with the Euro. So we're looking at average range movement over 60 pips in the 4 hours after the event. In the 1 hour after the event, less dramatic, but still over 43 pips range movement, most of it up. After 4 hours, it seems to have peaked, okay? And that's if we're looking at all events. If it came in above forecast, it hasn't happened, so there's no data for it. If it came in below forecast, it hasn't happened, so there's no data for it. All of the rate decisions in our look back period, which is over about the past, 8, 12 months, they all have matched the forecast. So if that happens again, the trend has been the Euro strengthens against the USD when the rate decision matches the forecast. Okay, it doesn't mean it has to happen every time. We see one time it didn't, but that's the trend. And so you can keep that in mind. If the rate decision comes in the first 5 minutes, it didn't move much. Okay, average range movement, 13 pips. Only one of them went up significantly, like 32 pips. The rest of them were either down or went up very little. 1-2 pips movement in the first 5 minutes. But after 4 hours, much more significant movement, with one exception. So you can put together a trade plan for these announcements. This is just one example. You can look at all of the announcements that are upcoming. Each weekend, for example, you can look up at the upcoming announcements for the coming week. The US announcements are lacking right now because of the government shutdown. Usually there's a slew of US announcements as well. They're not there right now because with the government shutdown, they're just not reporting the data right now. Those folks aren't working, a lot of them. So that clears up for a clean movement maybe with the Euro announcements, with this one in particular, because you don't have the US announcements at the exact same time like you typically do. So we expect maybe potential decent movements with the rate decision. We'll see how that goes, but you can see from the past what has happened, and you can have a trade plan for when the numbers come in. If they match the forecast, well, you know what has happened in the past, and you can try to have a trade plan ready to go as you watch that rate decision comes in. Okay. Now, where else can we look for fundamental news? The market buzz. Market buzz shows us the most trending instruments, stocks, commodities, whatever group of assets you want to switch to. We're on stocks right now. NVIDIA is trending the most, like most days lately. NVIDIA is trending the most. And so let's take a look and see what's the prediction, what's going on. If you read the most recent articles, you'll see a lot of positive news about NVIDIA having partnerships. The company reached $5 trillion in value. That's the first company to do that. So if you want to read these articles and find out maybe about Trump and Xi's agreements with their trade agreement, how it affects chips with NVIDIA, you can click these links. You can read the articles. You can find all the latest news on whatever it is you're interested in. Here's the latest information coming in. So you can find this information in a fast manner. I think you'll find a lot of positive news about NVIDIA. And then you also get the technical setup here. The price may rise, it says here, according to the signal, over 11%, almost 12%. So if you want the technical signal and breakdown, you click here. You see the price that it's expected to climb to. You see the support levels drawn out. And so you have the technical breakdown as well. And if the technical signal matches the most recent news as being very positive, I think this China deal with the US that just happened, I think that's very positive for NVIDIA in particular and any AI stocks. So we'll see how that goes. But not having 100% tariffs slapped on China, I think that's pretty good news in general, and specifically for the tech sector, we'll see. But it seems like that will create some bullish momentum. So when you combine the latest fundamental news, and that gives you a feeling that certain instruments might move a certain direction, then combine that with the technical signal, you've got yourself another trading strategy, another trading plan. Okay, so you really don't need to leave our platform. All of this is available in our app as well to be able to come up with multiple trading strategies with fundamental and technical news kind of combined together. All right, everybody, I think this is a good place to stop. I'll leave you with what we've talked about, and I think you'll find some good movements with this rate decision out of the EU that's coming up soon. You may look to potentially trade on that announcement if it looks encouraging to you. And some of the other instruments we looked at, I expect maybe some momentum here in the coming days, but we'll see. All right, everybody, thank you for joining, and good luck with your trading. Bye for now.